It's all about having the key insights, following the leaders of the crypto industry and background stories on blockchain technology trends to keep you one step ahead. Monty Metzger, CEO of LCX.com, keeps you up to speed with what's moving global crypto markets and gives you the latest insights about LCX's platform and ecosystem. This is LCX Insights Live.
Welcome to LCX Insights Live. I'm super excited to welcome you to another session. We're live this time on YouTube, on LinkedIn, on Twitter, and on Facebook, on all channels. And we have a very special guest today. In these live video shows, I'm engaging with the world's top blockchain projects, entrepreneurs, investors, and pioneers in crypto and blockchain in honest conversations meant to challenge traditional ways of thinking. But first, I want to give you a short update about what's going on at LCX as a short community update. So for all of you who don't know, LCX.com stands for the Liechtenstein Crypto Assets Exchange. We are a regulated fintech company based in Vaduz, Liechtenstein, and we focus on digital asset trading, compliant token offerings, and tokenization. LCX has received 8 blockchain-related approvals by the Liechtenstein regulator, more than Bittrex Global, Bank Frick, or any other company in the country. Our due diligence compliance requirements are at the same standards as a bank or other financial institutions, so we value compliance and regulation a lot. Liechtenstein, for those of you who don't know, is landlocked between Austria and Switzerland. It's a small country in the middle of Europe and has received a AAA rating at Standard & Poor's. That's the highest rating any country can get. And I think there are only 10 or 11 globally who have achieved that. Being headquartered in Liechtenstein gives us direct market access to 2 markets, so full Europe, European Union, European Economic Area, and Switzerland. And Liechtenstein really stands out because it has introduced a forward-thinking legal framework for cryptocurrencies and blockchain companies, providing legal clarity and security for LCX users. And this legal framework is so exciting, and probably it's the most exciting jurisdiction for blockchain companies globally at the moment, because it's not only regulating one piece of the puzzle, but it's a holistic approach across the whole industry with several roles and kind of alongside the value chain of crypto. So, but what's up with LCX in the last couple of days? You know, we are running this 100 days LCX challenge. And so every day there's something happening, but or even sometimes more than one announcement a day. So I think in the first 38 days now since we started, we did announce over 60 things. So new listings, new pairs, new partners, and so on. We did announce in the last 7 days, we did announce the listing of Celo Foundation's Celo token, and did integrate their blockchain within the LCX platform. And I have to say, it's amazing fast, really, really impressive what they've built. Today, we also launched the Celo trading pair, the first one, which is Celo LCX. We published the listing announcement of Constellation Network and its cryptocurrency DAG, and we also launched 2 trading pairs with DAG. At LCX Exchange, we started a crypto trading competition makes it very easy for everybody to join. And it's your chance to win a Rolex Milgo. So still time to join. It's open available to join until May 1st. So don't miss this. And of course, we started the 100 days campaign with probably the most exciting or one of the exciting partnerships. That's the partnership with Monerium on March 22nd last month. So at LCX Insights Live, we are inviting leading personalities, key partners of LCX, and founders or senior management of blockchain projects listed at LCX Exchange. So today's guest is the former vice chairman and chairman of the supervisory board of the Central Bank of Iceland. He is an engineer from DTU, Copenhagen, Denmark. He is a former adjunct professor in financial engineering at Reykjavik University and a visiting scholar at the Columbia University, New York City. Furthermore, he has co-founded 4 software companies, so a true entrepreneur, and served as a head of capital markets at the Landsbanki Bank, where he served as head of capital markets. He has been active in crypto since 2012 and has since then co-authored several reports on cryptocurrencies and blockchain technology. So now he is the chair and co-founder of Monerium. So please welcome with me, Mr. Jón Helgi Egilsson. Here he is. Welcome.
Hi, thank you, Monty. Thank you. Thanks for having me.
So
and before we start, Monty, congratulations on the success of LCX. It's fantastic to follow what you're doing.
Yes, we are like pushing forward and pushing the limits, and we are excited to see the growth happening.
Absolutely.
Like more new users signing up, and then great partners joining, and we're very proud also to do the announcement, or did the announcement with Monerium's partnership. And both of us know that our team is working days and nights to implement this great technology. And I think in the next couple of days, we will be able to do the announcement and then also the launch of what we have planned there in detail. But Jón, maybe to get started with, can you give the audience an overview of what Monerium is in a nutshell? Like, what do you do?
Yeah, so Monerium is basically bringing money, just regular money, not stablecoins, to the blockchain. And this is because we believe that most assets will be one day traded on a blockchain, and a lot of it is going to be traded against fiat currencies, just regular money. And then it has to be on blockchain. So Monerium was the first company that received a license in Europe to basically do this, and we are now licensed to offer this service, e-money tokens or money tokens, in the European Union, in Norway, in Iceland, of course, in the UK, and of course Liechtenstein. So we are, really excited to support all those wonderful projects that need to use this.
Perfect. So, what's the status of the company? Like, how big is Monerium? What's the traction, and what's the state of the product?
So we have been working in close pilots with several platforms. So our basically approach is to basically support platforms that need to use regular money on chain as a payment rail. And what we have done recently is that we have integrated our solution with the European payment system, SEPA, meaning that you can basically interact with the blockchain or the e-money tokens just through a regular bank account, just an IBAN account. So that is, we have been really focused on this year. We are very excited to come out with this and announce this in more detail in the coming days and weeks. The company is it's a company of with the extended team. We're about 12 people in the company. So it's a small company with big ambitions, shall we say.
But you also said that you gained some licenses. Can you give some clarity on that? What did you achieve there, and what's the kind of current status? What can you do with it?
Yeah. So basically, if I just this company is established in Iceland, and as many Europeans remember, maybe then in 2008, the whole banking system basically collapsed, right? And
right.
I was living in New York at the time, and the CEO of Monerium was living in London. And we were just on a vacation in Iceland. We were thinking, okay, so this is 2012, and we were thinking, what would happen, or how would this whole episode of the Great Recession in 2008 had played out if we had, fiat money, just regular money on blockchain? Would it have changed anything? And so we did run kind of a thought experiment, and basically what we saw is that we could solve a lot of the problems that we had in the collapse of the Great Recession. And why do I say this? Well, it's basically because if you think about what happened, in Iceland in particular, then because the whole banking system collapsed, then the whole economy, had problems, because regular people and regular businesses, they could not access, their bank accounts, potentially,
Right.
if the banks go bankrupt. So we thought, okay, so if you have just regular money on blockchain and you are in control, you're not forced to basically keep your money in a bank account, which is basically a loan to the bank, then, it doesn't matter to you if the bank goes bust, in the sense that you will not lose access to your money. And also because everything is bundled together in the current banking system, then both money, deposits, and payments. So if that is why we have systemically important banks. So we thought, okay, so the solution to what we saw in 2008 in the Great Recession is basically to try to unbundle banking. So we thought, okay, so you have to unbundle money and deposits and payments. And then in 2014, we saw Ethereum being introduced with smart contracts, and we thought, this is a fantastic way, basically, to offer regular money on chain. And then the question was, okay, so how do you bring regular money on chain? And we looked at different legal frameworks, and we basically found that there's a legal framework in Europe that now has existed for over 20 years. It's called e-money, and this is basically a digital representation of cash. It's meant to be like that. So we thought, okay, so could we use this legal framework basically to get a license to issue this on a blockchain, which is of course different from the technology that it has been utilized, where e-money has been utilized, because it's peer-to-peer. So we just digged into this, and we found that this was possible. And so we just hacked our way through the e-money license in Europe. We built a system. We supported all the requirements by regulators. What you need to do, what you have to be able to do, and so on. And after a long period, talking to regulators in different countries, we got the license and are able to offer regular money on blockchains, just like you have euros on your debit card. Mm-hmm. Now you can have euros on blockchain as a token. And it's not, I just want to emphasize it, it's not, and I think it's important, it's not the stablecoin, because stablecoin is, and stablecoin may be relevant in some countries or some jurisdictions, but in Europe, we have a legal framework which is, it's quite good for the purpose of basically taking regular money on blockchain. So that is what we can do, and then you can basically make this. You can basically offer now, since we have integrated this with the European payment system, and then we can basically say to our customers, okay, here's a bank account, and you can configure it in such a way that all the money that goes into this bank account goes into your address on the blockchain. Mm-hmm. You can access it through your wallet. You can implement it into your smart contract. And then if you want to go back, you have a dedicated address which go back to the bank account. So it's a seamless way of basically going from the old world to the new world. And that opens, and that basically gives mainstream users access to, decentralized finance, which is fantastic in my mind.
That sounds fantastic. Yeah. So giving every user access to decentralized finance is a fantastic vision, but you are making it happen. And then one key part which you mentioned is you emphasize that Monerium is not offering a stable coin. And that's the common concept in blockchain, to issue stable coins with USDT Tether leading, USDC, the US dollar coin from Circle. But e-money has been there in the European regulation, and it seems that the two are very different. So can you explain what's the difference, and why does it really matter in terms of future of DeFi and blockchain?
Yeah, so if we just start by stablecoins, then stablecoins, and as I say, they may be appropriate and great value in some jurisdictions, but really for Europe, we have a better solution that we can utilize. And e-money is just money on blockchain. Stablecoin is approximately money. So sometimes it's 1-to-1, sometimes it's 1 point something to 1, or sometimes it's 0.98 to whatever to 1. So you cannot be certain, what basically rate you get. And then it's problematic if you want to basically integrate this into the payment system, because this is a different kind of asset, shall we say, although it is imitating the real thing. And because we are regulated and because this is e-money, then we are also restricted, what we can do. So there are, for example, requirements saying that, well, you have to redeem the e-money tokens 1-to-1 when the customer asks for it, 1-to-1. There are requirements, how you can safeguard the underlying fund. So if you give me €1 and you get €1 token back, we basically are not allowed to do. We have to safeguard this on your behalf in a certain way, and you have the claim on the underlying fund, which is really important. So take this, compare this, for example, to Tether. I don't know exactly how Tether is backing their coins, but there were some reports that, they might be backing this with, different assets, and it's okay when those different assets, if they grow more in value, but what if the upside, if it goes against you? So into this framework, we also have, there's a very rich consumer protection, in case if anything happens, the right of the consumer and so on. And as I said, this is basically the same legal framework as is used when you have a prepaid debit card in Europe. You have prepaid euros on your debit card, and so it's the same system. So, and even in some countries, in some jurisdictions in Europe, you as a operator, you can safeguard the underlying funds in a central bank. Mm-hmm. So it doesn't get much safer than that, is it?
Yes, and that's actually where we also met at a special workshop with central banks. I think this was at the OECD in Paris, and it was a fascinating inside workshop because, first of all, I noticed that all the central banks who had been represented there had a deep understanding about cryptocurrencies and blockchain. But of course, they have a lot of risks involved, and they have a lot of things to lose. The sovereignty of the money and control and power and everything. So, of course, there's a certain level of, I think they're just afraid of doing something. But on the other hand, we do see that central banks are moving. China, I heard about this digital krona happening. What's your view on the industry in terms of central bank digital currencies? Or I just recently heard the term of a decentralized. Why is it central? Like, shouldn't it be a decentralized global currency which we need to invent? What's your view on the state of the industry there?
Yeah, so basically, my my point of view is that, the fiat system is based on the fractional reserve system. It's not perfect, but neither is crypto. So I think there's a big opportunity basically to bring together the best of both worlds. So if you have then fiat on blockchain, you can do things that you couldn't otherwise do. Now, the central banks are really investigating this, and but when we talk about central bank money, then we have to distinguish between wholesale CBDC and retail CBDC. So the wholesale CBDC is basically a way to basically for the financial institutions to interact with each other, to settle funds between each other. But the retail CBDC is thought for the general public. And last October, then the European Central Bank issued a paper discussing the digital euro, basically, and they were contemplating, and they are contemplating, if the European Central Bank should basically offer central bank money in a form of a token to the general public.
Right.
And the benefit is according to the ECB, there are benefits like, of course, that it's risk-free because it's a central bank, and the European Central Bank can never run out of euros, right? Which is definitely a benefit. But
So what's your view on the proposal by the European Central Bank on the digital euro?
well, first of all, we have a digital euro as a token. We have e-money tokens already out there. And the only thing that the European Central Bank needs to do, if they want to offer the public e-money tokens or money tokens backed by central bank funds, then the only thing they have to do is that they have to say, okay, so you can safeguard, or you should safeguard, the underlying funds at the central bank. Bingo. So you have something which is very close to a central bank money, and then someone would say, well, why don't we just then let the central bank do it themselves? Isn't that the perfect solution? It is not the perfect solution, and the reason I say that is that this is about innovation, this is about technical innovation, this is about business innovation, and this is about KYC, this is about anti-money laundering regulation and so on. And do we really think that the central banks should be leading the innovation in technology? Should the central bank be deciding on what blockchain to use and how to develop that? What kind of a business model should you support? Because money, when it's get unbundled like it's being done today, it's going to be integrated into all kinds of other solutions. So the solution that has been proposed, and was actually proposed by economists from the IMF, and it was discussed in a working paper, which is called The Rise of Digital Money, and the authors are economists at the IMF, Tobias Adrian and Tommaso Grifoli. They basically said that the way forward should be to basically, if you want to allow the general public to hold central bank money, then you should basically have the central bank as backing different entities that are offering the front-end solution to the customer, taking care of KYC, deciding on the technology, how to, what to use, how to integrate this, what business models to develop, and so on. So this is a cooperation between the public and the private sector. And in that way, you basically, use the strength of the private sector and the public sector, which is the central bank, that you have secure money. And this is actually something that we are seeing actually happening. So I think it was last week when Bank of England was announcing that they are opening up access to what they call the omnibus accounts at the central bank for certain institutions, and then the access is for regulated institutions, and then the regulated institutions, they interact with the general public.
Mm-hmm.
If because there are also, so people can say, okay, so why don't we just get rid of all the banks? Of course you can do that, but we have to remember that we built, we have to take it in certain steps then, because we built the current banking system on a fractional reserve system, meaning
Yes.
that the banks have a role in the economy in basically creating money through new lending. And if you would like to change that, you can do that, of course, but you would have to do it gradually. And then and as the system is built now, then the central bank is 100 years ago, the central bank was thought to basically support the banks, be the bank of the banks, provide, be the lender of last resort.
Mm-hmm.
But if the central bank is basically taking over all the bank deposits, then what would happen if the general public would be scared that some bank is going to go bankrupt? Then they would all move to the central bank, and that would exacerbate the bank run. So there are many issues to consider, and some of the central banks have said, well, yes, this is a problem for financial instability, so we might then have to limit the amount that is accessible by the public, maybe to 1,000 euros or 2,000 euros or whatever. And then I say, then it's not really, then it's not going to be practical to use it
That's right. Yeah.
So I think a better solution is basically, what has been proposed, which is that the central bank is basically on the back end and offers a good connection or API, if you want, to the one that wants to serve the new economy with tokens on e-money tokens on blockchain.
Okay, and I think all this innovation which you are mentioning also means that the relationship between policymakers, regulators, and the blockchain and crypto industry is really critical to let the innovation thrive and that there are new ecosystems being created. And I noticed that you always, like from start, had been taking this regulatory first approach or regulation first approach to things. How would you value the relationship between regulators and the blockchain industry? What's happening there at the moment?
Well, I think we are. I think we're. In general, I think the regulators have been very supportive in general. And it takes time to change these things. This is a fundamental change because this is changing the way we're doing things, but I think in the end of the day, you want to have fiat system which is serving the public in a way that it's basically the reason why we have a fractional reserve system and a fiat system is basically it's not about the money bills themselves. It's about basically you want to make sure that the real resources like the human capital is used in a sensible way and it is put to use or can be used. You can have a money system which is not supporting the economy. So I think it's natural to expect that the regulators are always a little bit behind. Mm-hmm. But I think on the other hand that it's just our duty to make sure that we have to then engage with them, we have to talk to them, we have to understand their concerns, and because in the end of the day, fiat money is going to be regulated in some way. Even stablecoins that claim that they don't want to be regulated. I mean, if you think about it, then what are they offering? They're offering a stablecoin as a staple compared to some fiat money, and that fiat money is kept stable because of a central bank. Mm-hmm. So it's all linked. In general, I'm very happy with the way regulators have been approaching this, and I'm very happy with the European regulatory framework that we have. And I think we should just, it has to be tweaked a little bit. As I said, allow e-money issuers like Monerium and others to just access the central bank's reserves in a way that you can safeguard the underlying funds of the customers. It's their money with the central bank. That would just, we don't have to overcomplicate things.
Mm-hmm. Let's take some questions from the community, and they're just like throwing out again. We need your questions. Please comment on YouTube. We'll then can pick the questions right away. The first one is in regards to your product. So there's this question here from Boss Battle. Will Monerium ever include US dollar or yen?
Yes, so we have to start somewhere, and the license we have is we are licensed to offer this service in the European Economic Area, the European Union countries, and then Iceland, Liechtenstein, and Norway. Now we can support whatever currency we like. We can support the US dollar as well, and we currently support the euro. And that is then linked to the payment system. Now, we have issued the sterling, that is the British pound, the Icelandic krona, and the US dollar as well. But to connect that to the payment systems, the mainstream payment system is not happening this month or next month. But that is on the roadmap for in coming years. But we have solutions in the US like stable coins, and they are built on a different legal framework. They are not all the same. They are even different between states. So it's a completely different game over there, and we just have to see. But of course, we want to support the other jurisdictions as well as other countries. But we start with the euro.
Yes. Okay. We start with the digital euro. And so for us, the partnership is very exciting because we believe that the fiat on and off ramps, how to go in and out of crypto is super important. And of course, we'd like to launch euro pairs as well. So let's dive into our partnership a little bit more deeper. There's a question from Chris Keynes coming in. Can you give details on the implementation schedule of tokenized digital money, fiat gateway, euro trading pair on LCX? What's the planning for all that with Monerium? So, yeah, Jón, what can we say about this? What's happening?
Well, I could ask you.
So I think both of our teams had been really working very, very hard to make this happen. I can tell you what is planned, and I can also give you an update on the timing. So at LCX, we're planning to integrate Monerium as our gateway to deposit euro, and then immediately being turned into a digital euro by Monerium. So the moment you deposit, you send a SEPA payment with euro, this will be turned into digital euro and then brought on the LCX platform. So you will see it in your wallet. And then obviously we will launch fiat and euro trading pairs. So, and that's not far away. I think the implementation has been closed. It's completed. And now we are at final testing to get that out of the door early next week. So the kind of announcement will probably come out in the next couple of days, and then we'll launch it and make it available for you at LCX Exchange very, very soon. We will launch with euro pairs. The first one will be LCX and euro, and then we will roll out different other tokens there. So there's a schedule for that, and we will announce it step by step. So I think for the LCX community, that's an exciting step. And for us at LCX, we had been looking at how do we implement that? Should we work with a bank how do we make that available, kind of a fiat gateway in and out for our users. And we decided to first work with you. And the key reason is your regulation first approach, the proper setup you have done with the e-money license, and then really taking the industry forward. Because if we take something which is outdated already, it's not so exciting for our users. So we want to get and provide a seamless flow, a seamless user experience, and then rolling out kind of an instant deposit mechanism as well. So to clarify that, we will start with a standard SEPA, and then we'll go in an upgrade to SEPA Instant as well. So everybody who has a bank who supports SEPA Instant basically can wire money to LCX Exchange within minutes or seconds. So it might be even faster than any Bitcoin transaction. I think that's exciting.
Absolutely. You're obviously on top of this, and this is super interesting. And I know the tech team has been working around the clock to make this happen.
Yeah. So what's the importance of the partnership with LCX for Monerium?
I think it's really important to have, someone which is basically approaching the mainstream market in a way, and just make, you have the need, and solve real problems, solve real pain points, and so of course, I mean, that is obviously really, really important. That is what we have been doing. This solution came out of a pilot with another company. Basically, when we were integrating with their platform, then the experience was that saying, okay, so we have mainstream users, and it's too complicated to interact with the blockchain, to have the public key and private key and what have you. So can we somehow make it simpler? So what the feedback we got from real usage was that okay, so we have to simplify this even more, and that is how you basically create value. So having a fantastic partner like LCX is basically teaching us also how can we improve the product, how can we make it more efficient, and what pain points can we solve, what more pain points can we solve. So obviously it's really important to have a use case like LCX.
I agree. I think it's about solving pain points and pushing the industry to the next level. And like in general, I really see there's a shift, or it's a transformational turning point of the industry, because the past 10 years really had been a wild west of regulation, gray markets had been established, and uncertainty also for investors. And now there's a next generation of exchanges being launched, including LCX. We do see Coinbase growing, Kraken going for a bank license in Wyoming, and now regulators stepping up with guidelines, legal frameworks like the outstanding legal framework in Liechtenstein. And then companies like you and Monerium taking the industry forward. These are all signs that we are like leaving this Wild West behind and turning into establishing something which goes, which might grow much, much bigger than the current cryptocurrency markets as a whole. Everything that can be tokenized will be tokenized, and every financial asset will be represented on a token in any way, whether it's digital euro or a bond, a stock, or even tokenized assets, real estate, diamonds, or art. And I think that's really, really exciting to see. And there's
Yeah, I think so. And if you think about it, this technology was introduced basically in 2008, in October 2008, and started. Bitcoin started to trade in 2009. So this is, there have been some years to develop, and then we had Ethereum and all the other wonderful blockchains. And the promise was always that, so why is this important? Well, it's important because what you are essentially doing is that you're removing the middleman. What does that mean? It means, in finance, it means that you are basically facilitating something like, borderless finance or financial inclusion. You're enabling people to participate that couldn't participate before in a much, much easier way. It's a permissionless access to all those services. It is basically facilitating innovation and more competition. And it is also basically leveling the playing field and making it fair. And if you think, just think about all the innovation that we're seeing today. We have very interesting projects, in lending and borrowing directly peer to peer. And if you want to use this and make this happen, you will have to have real money. That's just, a part of the game. And you don't want to have, because, you have to make sure that there is a proper consumer protection. And that is basically what the regulators are trying to do. That is what they are trying to achieve, to make sure that everyone is following the rule. There are some rules to follow, and all these wonderful projects, they will not function without the proper, or shall we say, the right regulation, and make sure that the consumer is secure.
Yes, I think the right regulation and also kind of a balanced view on innovation. Because as an entrepreneur, as you are, I am, I think sometimes we need to break rules as well to come up with innovation. But looking at the cryptocurrency market as of now, breaking rules all the time will not give us anything. Like, we will end up nowhere. So basically, to really bring the industry forward, this balanced approach, working with regulators and policymakers, and also educating them on what we are doing, how the technology is being used. That's really where it gets exciting, where we can grow on the kind of current cryptocurrency market of, which is like around 2 trillion now, which had been doubling since January, but it could go to tens of trillion, hundreds of $1 trillion. I mean, the potential there in financial markets are tremendous. And this regulation question actually leads me to, I just want to bring in this question from Runnerman. A friend of mine asked why we should choose LCX Exchange over Bitvavo or Binance. Basically, I can tell you that there's a shift, there's a next generation of exchanges being established. And LCX is proud to be based in Liechtenstein, in the heart of Europe. And we have gained 8 blockchain-related registrations at the Financial Market Authority over there, really bringing this approach of regulation first to our users and working with partners like Monerium, who is establishing a legal framework for digital euro, which really brings the industry forward. So we want to provide security, not only technology security, but also legal security and safety for our users. That's the key differentiator, I think, if I look at the current market space. And there are only a few other exchanges who are really in that same category. While LCX Exchange had been just like launched with the new platform, we're growing day by day, and that's very, very exciting to see. There's another question here coming in again from Chris. Has Monerium chosen LCX because of all the licenses of LCX? LCX is still very young and still has a lot of development to do. So why does Monerium work with us? Just shorten that up.
Yeah, well, Monerium is young and growing, and so is LCX. Like in business, it's also about personal relationship. I met with Monty. I think it was 2 years ago, and we were discussing what to do and how this world could develop. And so we stayed in touch, and so that is also a part of the reason why we partnered with LCX. It's just a good chemistry with LCX. Plus, it's a European platform, regulated like us in this new market, and so it's a very good fit.
Great. Jón, I think for our audience, just to explain it one more time, what's the difference between a stable coin, central bank digital currency, and the digital euro, which you have done?
Well, the stablecoin is basically a proxy of a money. So it's trying to imitate a money. It's you have different types of stablecoins, but let's say you have a stablecoin which is backed by a fiat currency. Then that can fluctuate. So it is not always one-to-one. There are in the US they are using different licenses. They are not the same across states, for example, and the consumer protection is not in the same extent as we have in Europe under the e-money license. So basically, e-money is meant to be a digital representation of cash, and the legal framework was constructed in a way that it was supposed to be technically neutral. So it is basically focusing on making sure that anyone that operates a service, basically offering regular money on this technical platform, they will have to comply with rules with regard to safeguarding. They have to provide their own funds in addition to the safeguarded funds. There are rules how you can safeguard it, in what form, and so on. If you are a totally unregulated stablecoin, which is a very big part of the stablecoins today, then you can basically choose whatever you like, and if you go under and if you become bankrupt, I don't know what's going to happen. So the whole legal system around e-money is to make sure that the consumer is protected. Now, CBDC is a central bank money, and today the general public does not have access to central bank money in a digital format. If you have a wallet and you have just a regular note, a paper note, the euro, or if it's a plastic one or whatever, or a coin, and that is central bank money. But most of the money that we have is commercial bank money. It's basically created by commercial banks, not central bank money. And the discussion now is if central banks should basically to give the general public access to the central bank reserves, meaning that it is basically risk-free. But that would change the whole dynamic in the monetary system, and it would basically expand the balance sheet of the central bank, because then the central bank is the counterparty, shall we say, with the assets against those, shall we say, token issued and so on. And then you also have to, as I mentioned earlier, you have to answer questions like, okay, so how are you going to create money in the economy? A role that is now done by the commercial banks. This is all something that can be solved, but this has to be discussed. So in my mind, if the policymakers or if the politicians want to change the system and allow the general public to have access to central bank money, then it's really easy to do that within the current legal framework. But then you just have to change the way you have to allow regulated institutions other than banks to have direct access to the central bank reserves. That's the only thing you have to do. And then you can offer.
I think that's your master plan, isn't it? Like give Monerium access, and then you will grow. But you don't need this. I mean, you can operate right now already.
Yes, the way it's done today, for example, let's say, just take an example if you issued the local currency here, then basically, according to the legal framework, you're only allowed to safeguard the underlying funds on behalf of the customer in governmental short bills, basically. Mm-hmm. And that is really, I mean, that's governmental securities. So it's not central bank money the way it is today, but it can be really close to it. And as I say, it's a political decision if there's an interest to basically offer this to the general public, then the only thing you have to do is to allow regulated institutions to access the central bank reserves and safeguard the underlying funds there.
Mm-hmm. Now, shifting to another topic which I've been monitoring and watching closely is the development of like digital money, central bank digital currencies all over the world. You know, in my former life, before doing LCX and before running my VC fund, I'd been known to be a futurist and be traveling to the future hotspots. And now I've been watching that very closely as well. So I do see cities like Shenzhen really standing out now with digital payments, but also Japan had been always at the forefront of mobile payments. But now what we've seen in China is this introduction of the eCNY, the digital RMB, which is a state issued, like a central bank digital currency, which had been pushed a lot. So they've done raffles and discounts where, like, if you pay and use it, then you will get discounts at the retailers. But the kind of mass adoption really did not happen yet. And one of the reasons is also that China, of course, for them, it's the perfect tool to have complete control, monitor every transaction, even deduct taxes right away. Or if you cross the street at red light, the cameras will notify and detect your face with face recognition, and then deduct your fee on fines for crossing at a red light directly from your mobile or digital wallet. So I think that's Big Brother watching us, and that's also where Chinese people are a little bit stepping behind. That's one thing. And then the other element is that, of course, if there's something new, people need to first learn it, how to use it. So these are the kind of the barriers which we see in Asia. But my question to you is really, this is a development which had been shown all over the news now. It had been documented about what's going on in China. At the same time, the hype around Bitcoin in Asia is tremendous, and Chinese people love to buy Bitcoin, also taking it out of the monetary system of China and having some assets outside. And now, like in the US that has been discussed, China is doing that on purpose. They want to undermine the US dollar as a global reserve currency. And I feel now from this trade war, it turns to be a currency war. Would you agree to that? And what's your perspective on these games of power?
Yeah, this is really, really interesting question. So in my view, the digital renminbi of Bank of China is, of course, it's a centralized solution. It is basically controlled by Bank of China. And you mentioned that, two things. At least two things. This could be a question about enforcing the Big Brother concept. I don't know. Could be. I mean, we know that in China you have a social credit system. I don't know how it works, but I guess. And what I read is that you get credit. Depending on your behavior, according to someone. And I would be very skeptical of basically giving that power to a centralized authority. So let's say you have a bad credit rating according to authorities, and if you hold your money in a wallet which is controlled by a central authority, what will happen if you cross the line? Can they take the money away? Can they block that you can buy a flight ticket out of the country? I don't know. This Big Brother thing is really interesting, and there have been concerns that the digital renminbi would be linked to the social credit system. Now, what is it a challenge to the US dollar? I don't think so, really, because money is much more than just the technical platform that is built on. It's all the infrastructure. It's all it's much more. What I would think, and this is just my speculations, of course, is that when you have control of a currency like that in a centralized way for your own citizen, and you can basically control who can basically send money to who, because everyone is, I mean, there were news last week about people using this, and they have to be whitelisted. So, this is not, this is really controlled. But you can also then control access to the China massive market, which is developing. And let's imagine that you are a US company that is operating in China, and there is some dispute between the leaders of China and the US, and there are some sanctions. You could theoretically, at least, you could basically say, well, okay, so we are gonna make sure that no Chinese customer can shop with this company if you have total control. So it could also be one way of making sure that you can put in place sanctions and so on. But these are conspiracy theories, of course. But my concern is that this is a centralized version. This is not decentralized like the tokenized economy. And this is by a government which is not democratic. It's not my choice, shall we say.
Okay. Yeah, understood. I think if we look at the conversation which we had today, is like my key takeaway really is your approach on creating a framework for innovation supported by, or like engage, where policymakers and regulators are engaging, but they're not blocking the way, and they're not probably stepping aside a little bit in terms of giving up control, but rather creating a framework of innovation. And what I mean by that is, I think you said, like, why should central banks come up with central bank digital currencies? Rather give a framework where companies could engage and issue digital euro or digital yen, digital dollars in a compliant manner. And then competition is something good. We've seen with the rise of social media, with MySpace and Friendster at the beginning, that this innovation had been driving competition and new markets and new innovation. But in the end of the day, there are some who succeed and some who kind of die out. And I think this new competition in currency is something super exciting. We see competition of cryptocurrencies. We see Bitcoin, the next Bitcoin. There's Bitcoin Cash, Bitcoin whatever. Then there's new stable coins coming out, rivaling with digital euro, what you are doing. I think this variety is super interesting because it creates a marketplace where then consumers can choose. And ultimately, I hope that they are doing smart decisions also in terms of what they choose, and we'll see who will be the winner at the day. And a lot of the technology and solution which we currently see in the market are very new. So we see these stable coins there. We see first exchanges, DeFi protocols, or even stable coins without any backing, just algorithmic stabilization. This is all fascinating, but we don't know what will be there in 5 to 10 years. It will be very interesting to look what's the next Uber, what's the next Facebook, what's the next dollar, what's the next euro, who knows. So I'm super excited to look at that. Now, to sum up our session, kind of a last important question to you. If you look at the current markets of today, what are your key 3 trends and drivers of the industry of today?
Well, I think the number one is basically what is happening and what we have been anticipating for a long time. And you mentioned is basically the tokenization of assets in general, because that is fundamental to many things. We don't know how this will play out. We don't know what innovative solutions we'll see tomorrow, but the best way to foster that and facilitate that is to allow the mass, the more brains that are working on this and more competition, the better. So tokenization of the economy is, in my mind, really something which is happening much faster than we have seen for a long time. Number two, I think what is important to realize is that there is this unbundling of banking. And what I mean by that is that now we saw the stable coins and they have played out in their way, and now we have e-money or just regular money tokens like Monerium. And that means that we can now unbundle money and payments and storage or bank accounts, which is basically changing the whole picture. It can basically make the system more secure. It can increase financial stability, and that is a discussion that regulators and central banks will have to engage in. But I think that is really exciting. The unbundling, and I think this is inevitable. Unbundling of banking is basically happening, and we should just do it in a orderly and so to say, control way through making sure that the regulation is supported. So I think that is really important. That is number two. Now number three, which is basically which is starting to happen, but will be more forceful over the coming years, is that when you have unbundled those things, then there will be, shall we say, rebundling. Because when you have taken things apart, then that gives you the opportunity to put them together along and embed them with other functionality in a different way. And that is what will create, new opportunities, new business opportunities, and so on. And it's just like, 20 years ago, you went to a video store to basically have your, VCR, you have to go there. And you had a TV to watch films or whatever. Now, and then this was unbundled. You could have the video was, you can have a video on YouTube, and you can have live stream like we are having now over the computer, and then you can embed that into all kinds of other functionality, like you are basically a TV station. 20 years ago, no one would have imagined that you could basically be broadcasting live a session between countries and between continents and so on. So the same thing is happening here. You unbundle finance, take into these models. That's number two. And number three, yes, then you're gonna find new ways to basically embed them into other functionality and create something great. Okay. What's going to be, I don't know, but we'll see.
So your key trends are, to summarize, tokenization of assets and financial systems, unbundling of finance, money, and banking as we know it, and then rebundling it, like putting it back together, but probably differently than before, and creating the future of banking, future of money as we know it. Very, very exciting, Jón. Good points. And I remember the saying from Bill Gates, who said, banking is needed, banks are not. And probably we have this Kodak moment now here where we see a lot of disruption happening, business model being shifted, probably some companies who will not be existent anymore in 5 years. But then there's this huge wave of innovation and opportunity. And that keeps me up at night all the time. And I hope everybody here who's watching is as excited. And with that, let's sum up, let's wrap up, say goodbye, and then hope to welcome you in Liechtenstein in person soon.
Hopefully I'll be there very soon. Soon we'll gonna announce the launch of our project. And just thank you very much. It's been a fantastic discussion. Thank you very much.
Thank you. Bye-bye. Thanks, guys.
This is LCX Insights Live. For more insights, please visit lcx.com/insights and follow us on Twitter @LCX. Onwards and upwards.